Welcome to all of you in video. Today we are talking about 1.65 trillion in the shadows, how the AI bubble survives on the off balance sheet date. Let's discuss about, and you can see on the screen, the largest infrastructure built out in human history. It's the big tech. Is on the track to spend over $700 billion this year building out AI that requires roughly 2.5% of the entire United States GDP, 2.5% of every dollar. Jensen Huang, NVIDIA CEO, the largest infrastructure build out in the human history. No single source of money on earth is deep enough to fund this alone. Where is the money coming from then? Where is the money coming from then? Let's discuss about the funding stage 1. The build out is draining the vaults. As you can see on the screen, the historic norm, the AI era. For most of the last decade, top tech firms spent 40 to 50% of every dollar of cash flow on the capital expenditure. And the AI era, 94%. PIMCO estimates this year hits 94%. The cash machine is no longer running the build out. The build out is eating the cash machine. Now in the AI era, the build out is eating the cash machine. Highest rated name carry net debt of just 0.04 times earning, the safest borrowing on earth, now forced to look elsewhere. Funding stage 2, as you can see on the screen, overflowing the visible bond market. As you can see on the screen, in just 5 months, the borrowed more than the entire previous 5 years combined. As you can see, in 2020 to 2024 average data, 28 billion, and 2025 it's less than 100 billion, and 2026 is the first 5 months it's a 159 billion. Tobin Adrian, IMF expert, what is quite worrisome from a financial stability perspective is that the major tech firms are starting to leverage of themselves. US dollars market saturated. Alphabet raises 32 billion across 4 currencies in less than 24 hours. And after that includes 100 years bond 10 times oversubscribed. Let's discuss about the deepest capital market on the earth are tapped. Cash flow reinvestment maxed at 94%. Tech sector consumes nearly 18% of the total US investor grade debt. US and international bond market saturated because you can only issue so much debt on your books. The financing machinery had to move into the shadows. In 2007, the warning before the fall. The event filed August 2007, and the Federal Reserve Symposium Jackson Hole economist Paul M. PIMCO warns of a secondary banking system operating without the oversight. The whole alphabet soup of the leverage of non-bank investment conducts the vehicles and structures. The shadow banking system. Institutions that borrow like banks and lend like banks but lack deposit insurance, Fed safety nets, and traditional regulation. In 2007, it was built on the mortgage. Today, it's built on the data centers. Now let's discuss about the visible and invisible ledger. As you can see on the screen, it's a visible or invisible. How will you separate this? Liability type, the aggregate. The reported debt on the books 1.35 trillion and hidden debt 1.65 trillion. Inside the hidden pile of debt is not only the bigger than the visible one, it is buried in the footnotes of the public filing. 1.35 trillion visible and 1.65 hidden, as you can see on the screen. The anatomy of a shadows, how SPVs, hide debt. How they hide the debt? The analog mechanism. Your cousin ID, open credit card, buy a TV. You swipe it, you enjoy the TV. When the bank asks about your debt, your answer is technically zero. The corporate mechanism. The Acme Corp creates special purpose vehicle. SPV borrows debt. SPV buy asset and lease Acme. On paper, the original company and the SPV are separate entities. The debt belongs to the SPV, but the corporate parents get the asset. And case study, let's discuss about the case study. Project Big Net, the blueprint. The asset, Hyperion data center, Richland, Paris, LA, and the tenant Meta design builds, operates only tenant. The vehicle BigNet investor SPV, $27.3 billion investment grade bond. It is exactly the shadow banking machine running live. The tape that built Meta Hyperson campus belongs exclusively to the special purpose vehicle named after a friend's pastry. What's the 80-20 loophole? Hiding 27 billion in the plain sight. 80% of the equity blue all capital, 20% equity Meta. Bank holders BlackRock, PIMSO, wire cash to BigNet. Bing builds Hyperion data center. Meta's rent repays bondholders until 2049, and Meta moves in a sole tenant. It's a cycle, it's a complete cycle. Pursuant to the structure at 20% equity, Meta is not the primary beneficiary of the venture. Because of that single phrase, 27.3 billion of the debt legally vanished from the Meta balance. Let's talk about the hidden safety net. Page 106 of the annual report. Asset value, you can see 20 billion and the 28 billion aggregate threshold the floor. Meta, $8 billion check time. Except we have provided residual value guarantee with an aggregate threshold of the approximately $28 billion that decrease over time. To wallet stick, we don't own it. This isn't our liability. To bondholders, if this loses value, we have got you covered for up to $28 billion. The cherry on top, the duration mismatch. In 2024, 2029, 2034, 2039, 2049, 44, and 2049. As you can see, the Meta Hyperson lease for 4 years. Project BigNet bond obligation 24 years. It's a 24-year loan resting on a 4-year lease. Hyperion is a hyper-customized supercomputing site built for the Meta's specific hardware. If Meta walks away in 2033, bondholders are left holding a highly specific empty shell in rural Louisiana for 2 decades. The replicating virus project Sophia. Let's discuss about this. As you can see on the screen, wait a second. You can see the tenant Meta, greater than $12 billion of the bonds, 1 gigabyte AI data center, El Paso, TX, and the underwriters JP Morgan Stanley, BlackRock. BigNet didn't stay one-off deal. It became a template. Last week, BlackRock started marketing the sequel, same structure, same 80-20 split, different pastry. 9 months later, the 1.8 trillion contagion. Growth rate of book debt across the top 5 companies has grown 8 times more since the 2022. Queen Emmanuel law firms greater than $120 billion moved off the balance sheet in under 2 years. Moody's less than 660 greater than 660 billion. In the future, AI lease obligations completely invisible on the main balance sheet. Morgan Stanley total of balance sheet exposure across the industry roughly 1.8 trillion. This is no longer isolated to Meta. The entirely technology industry is utilizing the blueprint. Let's discuss about the systematic concentration wave. The systematic premium investigator dossier, the systematic concentration wave. BlackRock, Black Owl, PEMSO, JP Morgan. It's a complete cycle. SPPs, the pastries, the five hyperscalers, systematic threat. When five borrowers use one structure funded by one handful of lenders, the risk stop being diversifiable. It's the same bait written five times. It is the same bait written five times. Financial echoes 2007 versus 2024. The underlying asset in 2004 to 2007 era, subprime mortgage. In 2024, AI build out multi-gigawatt data centers. It's become multi-watt gigawatt, and the hidden mechanism MBS or CDOs, and the in 2024 AI build out SPVs project financing. You can see on the screen and you can read it. You can compare with the 2004 data with the 2007 to 2024. The hype narrative, the housing price never go down, and AI is the next industrial revolution. In 2024, the vulnerability, mortgage defaults, tech revenue duration mismatch. In 2024, Queen Emmanuel, lawyer who litigated the 2008 fallout, describes watching this unfold in two words: deja vu. The last time the structure standardized this fast in 1998 to 2000, telecom, and 2004 to 7, it's mortgage. Let's discuss about the 1.5 trillion whole. 1.4 trillion company cash flows, you can see, and the 2.9 trillion total estimated bill out cost through the 2088 per Morgan Stanley. Big tech unprecedented cash engines cover less than half the projected cost. For the bill out to survive, the shadow borrowing window must remain wide open, funneling another 1.5 trillion of debt into the system. Let's discuss about the four-legged parlay. 2.9 trillion AI shadows debt. You can see every single leg stacked on the top of each other hit for this to pay off. Revenue must multiply 110 billion versus the 700 billion in the spendings. Returns must stabilize, currently sliding 40%, less than 20% after the 10%, 40%. The window must hold the 1.5 trillion funding gap bridged without the booking bond market. The grid must absorb US power grid already pinning at the price caps. Not an investment, and existential gamble. Not an investment, an existential gamble. When you step back and look at the hidden ledgers, the footnotes, and everything that has to the right, this stops looking like an investment into an emerging technology and starts looking like the largest leveraged bet in a financial history. And thank you guys. And if you are new to this channel, please subscribe and make support to me. And if you want any another topic in the financial, you can just comment down the video, comment in the video, and I will provide you. And thank you guys. And at last, I'm so thankful to all of you guys. And if you are new, then please subscribe it and press the bell notification icon too. to I will get the motivation, and after that I will work hard for you to bring the new videos, bring the new topics, everything. Thank you guys, welcome.